Today, we're diving into a really fascinating story in the tech world. It's about a company called Wolfspeed. And man, what a paradox. You've got this world-changing tech, but it's trapped inside a super dangerous financial setup.
So let's just get right to it. I'm going to ask a huge question right off the bat. Is it possible that this is the most important company in the entire AI supply chain? I know, that sounds kind of crazy, right? But stick with me because there's a really compelling case here.
And this is where the story gets really wild. It's like two completely different companies in one. On one side, you've got this absolutely revolutionary technology. I mean, they control a critical choke point for the next wave of AI, and they've even got a government-backed monopoly on a key part. But then, you look at the other side, and it's a total financial nightmare. We're talking a balance sheet just riddled with debt and these tricky convertible notes that could, and I mean literally, wipe out shareholders.
So yeah, that's what we're calling the AI choke point paradox. How can both of these things be true at the same time? How can you be the key to the future and a financial black hole? Well, that's what we're going to try to figure out.
All right, first things first, let's look at the good stuff, the bull case. We're going to explore why their technology is considered this unbeatable fortress, the holy grail part of the story.
Okay, so the secret sauce here is this material called silicon carbide, or SiC for short. The easiest way to think about it is it's like silicon on steroids. Seriously, it can handle way more heat, much higher voltages, and it's a whole lot faster. And when you're talking about the insane power demands of modern AI data centers, this stuff isn't just a nice-to-have, no way. It's absolutely essential. Now I want you to remember this number, because it's probably the single most important piece of the puzzle. 300 millimeters. Why? Because Wolfspeed is the only company on the entire planet that's figured out how to make a 300 millimeter wafer out of silicon carbide.
So what's the big deal about 300 millimeters? Well, it's everything. Moving to this size is a massive generational leap. It's what allows you to actually mass produce this stuff economically. The entire industry has been trying to crack this for years, and only Wolfspeed pulled it off. This gives them, and I'm not exaggerating, monopoly-level power. They have a 5 to 10 year head start on everyone, and it makes them absolutely critical for what's coming next, like NVIDIA's new Rubin architecture.
And if that wasn't enough, get this. The US government considers this technology so important, it's a matter of national security. They've poured over $750 million in CHIP's Act grants into Wolfspeed. They've basically built a government-sponsored fortress around the company. So, a technological monopoly with a huge head start backed by the government, I mean, that sounds like a slam dunk, right? Well, hold on, because now we have to turn the coin over and look at the dark side of this story, the financial labyrinth.
Right away, the balance sheet just screams warning. Yeah, they've got about $926 million in cash, which sounds okay, but they're carrying $2.1 billion in debt. You do the math, and that means they're operating with about $1.2 billion of net debt. That is a huge weight to carry.
But believe it or not, the debt isn't even the scariest part. No, the real problem is what's hidden inside that balance sheet. There are these little financial time bombs just waiting to go off, and they're pretty much designed to destroy value for anyone who owns the stock. Let's take a look at them.
All right, time bomb number one, a convertible note worth over $330 million. So what's a convertible note? Basically, it's a loan that can be turned into stock later on. And here's the catch. If the stock price doesn't go way up, this thing converts at a huge discount. That would create a flood of new shares, and poof, the value of everyone else's shares just shrinks. It's like a sword hanging over their heads.
And it doesn't stop there. Time bomb number two is another one of these convertible notes, this time with a company called Renesas. This one note, all by itself, could dilute shareholders by almost 14%. You can see how these layers of risk are just piling up.
And for our third time bomb, we have 11.3 million shares. Now, these aren't held by excited investors. They're held by old creditors from a bankruptcy who got stuck with stock instead of cash. So you can bet they aren't long-term believers. They're just waiting for the first chance to dump these shares on the market, which could totally crush the stock price. Okay, so let's add all this up. This is what we're calling the dilution avalanche. When you combine all these financial bombs, the people who own the stock today could see their ownership stake get cut almost in half, down to just 57%. A whopping 43% of the entire company could just be given away to the lenders. So what you have here is this incredibly dramatic race against the clock. On one side, you have this amazing, world-changing technology, and on the other, you have a financial time bomb just ticking away. The big question is, can they make enough money, fast enough, before the whole thing blows up? Let's just map this out. Right now, they're burning through cash. By 2027, their cash pile is going to be getting pretty low, and that's when those convertible notes start to look really, really scary. That means by 2028, they have to be making serious money. If they're not, well, by 2029 or so, the dilution could just be catastrophic, and the stock that people own today could be worth next to nothing. The pressure is absolutely on.
So, you've got these two giant forces pulling the company in opposite directions. What happens next? Is Wolfspeed the Holy Grail? Is it a trap? Or is it something in the middle? Let's break down the possibilities.
Okay, the super optimistic view, the bull case, is that they just nail the execution. The tech gets adopted everywhere, revenue blows past $1 billion by 2028, and they become insanely profitable. If that happens, then yeah, even with all that dilution we talked about, the first investors in could still make 5 to 10 times their money.
Then there's the bear case, the total nightmare scenario. They stumble, they can't get the revenue up, they keep burning cash, and that dilution avalanche gets triggered. The stock goes into a death spiral, and pretty much all the value for the original shareholders just evaporates.
But you know, the most probable future might be something in between. Let's call it the muddle-through scenario. They do okay, not amazing, but okay. Revenue grows, but it's not a rocket ship. The dilution happens, but it's not a complete catastrophe. It's not a home run, it's not a disaster. It's just a long, slow grind that maybe gives investors a decent but not spectacular return.
And that really brings us back to the fundamental question here. Everyone agrees this technology is going to create a ton of value. The real mystery is, who gets to keep it? Is it going to be the people who bought the stock, believing in the vision? Or is it going to be the lenders and the creditors who set up all these financial traps in the first place?
And I think this quote just says it all. The bull case is real, the bear case is real. The trap is waiting for whoever gets the timing wrong. And that's Wolfspeed in a nutshell. It's a high-stakes tightrope walk. You've got this incredible, game-changing technology on one side and this incredibly dangerous financial structure on the other. And honestly, the outcome is anyone's guess.